The government quietly revised GDP numbers down, and most people don't pay attention to the revisions. So here's what happened. In the first quarter of 2026, GDP growth was revised down from 2% to 1.6%. That's a meaningful revision downwards. And the thing is that most people, they just don't pay attention to this. But if you're concerned about your job, your savings, or investments, you should be. The GDP revisions, they happen. It's how it goes, right? The Bureau of Economic Analysis, they release initial numbers, and then when they get more complete data, they update it. Completely normal and happens every single time. What's not normal is the reasons why these actually got revised down. So, two things happened. First off, consumer spending came in way less than they expected. Consumer spending is 70% of our economy. So, when the number gets revised down, it's not just a technical adjustment, it's actual Americans who are spending less money. And in this case, they spent way less money than what was originally estimated that they were spending. Second, here we have inventory investments. Those dropped way more than expected. What this actually is when businesses like manufacturers or retailers stock up their shelves in their warehouses. Well, they're doing that less, which means when they stock less stuff, they're not sure and they don't have confidence about the future. So why buy stuff that you don't think you might not be able to or to sell, right? If you don't think you can sell it, you're not going to stock it. So those two numbers together are why GDP went from 2% to 1.6%. But there's actually another very important number that nobody is really talking about, and it's probably even more important, and that is the corporate profits. So in the first quarter of 2026, corporate profits grew by $40.4 billion. And yes, that sounds like a lot of money. But when you compare that to the fourth quarter of 2025, where corporate profits grew by $246.9 billion, it's not a small decline, and it's a total cliff. And I sure you're saying, well, fourth quarter, that's holiday spending, and you're not wrong. But the numbers, they account for this and they adjust for it. So this was a massive decline. We went from nearly $250 billion in profit to $40 billion in a single quarter. That's an 84% collapse in the rate of profit growth. Let's get this right, for the corporations. And I'm sure you're like, yeah, great. Okay, the corporations didn't make as much money. Who cares? But here's the thing. The corporate profits are actually a leading indicator. So when companies stop making as much money, well, they don't just absorb it and go about their business. They first slow their hiring process, and then they start letting people go, and the people who are on the verge of being let go are the first to go, and then other people are let go. And the layoffs don't show up in the news before they actually happen. They show up after, and the data here is predicting that these things are going to happen. It's stuff like this that doesn't get covered, though, and this is the stuff that actually matters. So what does this all mean for you? It means that we have a economy that is technically growing at 1.6%. It's positive. It's not a recession. But the revision downward, the softening of consumer spending, the inventory pullback, and most importantly, the dramatic deceleration in corporate profits, these are not signs of an economy that is picking up steam. They're signs of an economy that is quietly losing altitude. And the reason I think this matters right now specifically is because a lot of people are making financial decisions based on the assumption that, well, things are basically fine. The market's been doing its thing, it keeps going up, and people hear GDP is positive, and then they tune out. But GDP being positive does not mean that GDP is healthy. They are two very different things. And if you're hoping that your job is secure, well, right now, you're going to have to double check that because we're not sure of that. Right now, if you're going to make big purchases, you're worrying about what's going on in your portfolio, you need to know about this data. You need to make judgments based on what is potentially going to happen. If we get another quarter like this, you're going to have to make major changes. So I'm not here to tell you that the sky is falling. We don't know what's going to happen after the numbers come out in essentially July or so for the second quarter. But most people aren't talking about this. These revisions do happen. corporate profits, they just totally cratered. I mean, that's insane of a drop. And they're not likely to pick up. So I want to know, are you seeing that, you're having these issues? Do you see businesses around you that aren't hiring? Or do you see that they're not stocking their shelves as much? What are you actually seeing out there? And before we go, we need to talk about this. What are you going to do to protect yourself? First off, if you think you're potentially going to get laid off, yeah, you need to get the resume together, get in touch with friends and family and old work contacts, because the people that you know are the people who are going to help you get another job if you happen to lose one. Right now, you need to be worrying about that emergency fund, stocking up and paying off debts where you can. And you definitely need a very good resume. We need to prepare. I don't want anybody freaked out though. No panic, anything. But this does not look good for us. And with everything else that's going on, this is a surefire sign that we're at a tipping point. All right. I want you to drop a comment below. Be sure to subscribe. Have a wonderful day. Besides the awful data that I'm giving you, I'm so sorry. Try to have a wonderful day. And remember, think differently, take control, be a renegade.